Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 26th of August, 2023, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the 5th and last week of August. And across these three majors, the bearish trend is still continuing, with the Euro attempting to fight back on a Wednesday, as with all these three pairs as well, because on the Wednesday, all the major economies, their flash PMIs were weaker than expected, but including the US at night. So they managed to fight back and held back for another few more hours before the following day. It continued and resumed the bearish trend. So on Wednesday was a little fight back with the US flash PMIs weakening as well, and then followed through with the main bearish trend. So that was the main driver for last week with the flash PMIs, and then as well on the Friday with speeches from all the major central bankers at Jackson Hole Symposium, and reiterating their commitment to tighten and to manage and lower the inflation rate to finally hit their target of 2%. So that theme still continued throughout. And let's take a look at the main drivers for last week and look forward for this coming week, the final week of the month. Let's take a look at the main drivers for last week and look forward for this week's key news. And last week, the major drivers started with the flash PMIs for all the major economies, and in the afternoon session, Europe and UK were all lower than expected, and eventually at the US session at night for Asia, it's also lower, and that gave some hope for the other economies with the US dollar turning down. But it followed through on the Thursday and Friday and continued lower as well. And especially with the concern that with the speeches coming up, which they did mention expected, the Fed and the ECB, Powell and Lagarde, did maintain their stance on further tightening if needed, so that they can contain inflation and drive it to the 2% target rate. So, but they will be looking at data month to month, and it will be mainly data dependent. But don't expect any interest rate cut anytime soon. There could be a hold for the Fed at the next meeting in September, but we'll see how the data shows up, especially this coming week with a lot of inflation news, the Eurozone CPI flash estimates, and the main CPI, main inflation figure that the Fed is looking at, the core PCE price index. But it starts off with the Australian economy, their CPI as well, forecasting slightly lower rate. Then the US preliminary GDP figure quarter over quarter is maintained at 2.4%. The Eurozone CPI is also forecast slightly lower than the previous month. PCE will be the same as the previous month. And then the on Friday, the US non-farm payroll report forecasting lower jobs added over the August figure. And later during the US session, there's also the ISM manufacturing PMI. So a lot of news this coming week, the final week of the month, except the Friday is the 1st of September, first day of September. And we'll see how the inflation figures will drive the weekly close for the week, and which will eventually be a monthly close. Right, but so far this US dollar is recovering, and the other major currencies are turning bearish and continuing in a bearish trend. Let's go back to the analysis, and let's begin with the euro, where it's continuing to edge lower and lower, and did dip below the support area at the 108. Just closed just below that, it dipped lower, and then closed just below the 108 and below the daily 200 EMA. Let's take this one out, maybe bring this one lower down to the 138 fib extension. Let's see, for now we'll leave it there, and interim resistance still at the 78.6 fib retracement along with the previous swing low here, and 110 is still a major resistance. But the Wednesday, where it finally hit the daily 200, it did manage to bounce back, and that's due to the poor US ISM flash figures, and but it was only temporary, with still a bearish turnaround on the Thursday and on the Friday close as well. So let's take a look on the weekly time frame, and we'll see, yes, still a bearish close for the week and sitting on the weekly 55 EMA. But overall, it's already 5 weeks of bearish move, and a pause on one of the weeks. So that still could be one more week of weakness to close for the week and for the month, which, let's take a look on the monthly time frame, and that's yeah, from the previous month there was a long upper wick which continued to drive the momentum lower, bearish bias, and moving down towards the 107 level, which is, yes, this is just above the 138 fib extension. Let's see if we can update this fib now, and let's take this swing low of the bearish channel, and it did hit the 138 fib extension. It's just at the 107.73, and the 162 fib extension is just below the 107 round figure. So let's show this as an interim support, and interim resistance at the swing low and the 109. So let's see if it's able to find some support and at least consolidate for the last week of the month. Otherwise, if it breaks below the 138, then it's going to try to target the 107. To close the bearish month. And this week there's prelim GDP from the US, but starting with the Thursday, there's the Eurozone CPI flash estimates, and of course the key ones will be the core PCE price index and the NFP report. But that's already moving out into the first day of September. All right, let's compare this with the US dollar index, which should be recovering higher as well. And here's the DXY, where after an attempt to climb up higher with poor ISM flash PMIs from the other economies, it was dragged back down with poor US flash PMIs, but then managed to still find support at the 103 and this rising trend line, and recovered strong on the Thursday and then on the Friday with a slight gap up as well, and hitting the 104 resistance zone. You can move this up to the swing high now at 104.25 as interim support. And there should be strong support now at the 50 pip, just below the 103, where the daily 200 is coming up as well. Let's remove this for now. Let's take a look on the weekly time frame, and it's a bullish close hitting the 104, and already 6 weeks of bullish recovery move right from the weekly 200 EMA. And on the monthly, it's already a very strong bullish candle already. Right, so we'll leave the fib as it is for now and see whether it's able to test the swing high, recent swing high, and then could be some consolidation to close the week and month. So it's critical for to watch out for the PCE price index this week. But it could be starting to consolidate soon. All right, let's move back to the other pairs. Let's move on to the cable. And cable is eventually has fallen through the lower channel trend line on the Wednesday with the flash PMI's figures, but then recovered and closed back within the channel because of the US poor data as well. But on Thursday, it fell through further again and had a very strong bearish close and followed through on the Friday to hit the 38 fib odd. So let's move this key support zone down to the 125 with the 21 fib and the daily 200 coming up. And this zone here will be an interim resistance zone now. And the major resistance will be at the lower channel trend line that aligns with the 786 retracement. Okay, so let's see if bearish momentum continues this week and dips into the 125, or whether it's going to hang on and consolidate. There's no major news on the UK, so it's up to the US dollar to drive the price action. Let's check the weekly time frame. And that's finally a week close after not failing to break above the weekly 200 for 3 weeks now, and finally weakened down to the 38 fib. For the month, it's going to be a bearish close for the month if it's going to continue next week. Okay, so the breakdown was from the bearish channel here, or bear flag. All right, let's move on to the Aussie dollar. And the Aussie dollar is the only one that didn't dip lower because it had already dipped pretty low the previous week, below the 64 round figure, and managed to climb up to recover to the 138 fib extension. And that was the Wednesday, but then the Thursday fell through again, back down to the 64 round figure. So this support zone is still key. The confluence at the 63. Major resistance is still above at 66. And let's also add a interim support at 64. All right, we'll get an early look on the Wednesday with the Australian CPI. See whether that's going to give some concern to the Aussie dollar. And then also exposed to the US news with the PCE and then the NFP data. Let's check the weekly candle. And that's a doji and with a long upper wick, pushing it all the way back down, almost a gravestone doji. So let's see whether it's able to consolidate or whether it's going to break down to hit the key support zone. And on the monthly time frame, yeah, that's a very, very bearish candle. All right, so let's see how the US dollar perform this coming week with a number of US inflation news, and then followed by the NFP on the first day of the new month. So do check out my other videos on spot gold and dollar yen, and have a safe week and a good trading week, and cheers for now.